The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome to another beautiful day at the headquarters of technical trading and investing. That is TFNN.com. Got an interesting expiration day out here today. Just looking at the volume before we started. And we're just under 2 billion shares on the consolidated New York Stock Exchange tape. For those new to my program, you may hear different volumes for the market. Some are just the floor traded stocks on the NYSE. Sometimes it's the consolidated feed from the New York Stock Exchange, which includes the American Stock Exchange, plus all the ECNs, Electronic Commerce Networks, that also trade stocks. You may have heard of them with names like BATS and Archipelago in the past, but these are alternate ways that are incredibly cheap in comparison to the New York Stock Exchange tape to trade. If you trade on the floor of the NYSE, each share is probably going to cost you 4 times what it would cost on an ECN. There's only about 1/3 or even less than that now of the shares on the NYSE that are literally traded on the NYSE. They're almost all traded on electronic commerce networks or in dark pools. And at the end of the day, the volumes dump back in. I think they've been rather lax about reporting times and sales. I think that's over the last few years we've seen a lot of volume come in at the very end of the day. The question is whether or not that was traded much earlier in the day. And I guess there's some discussion about working on that. Probably the big news in the markets, other than expiration today, is people are running the old idea up the flagpole. This one is the end of penny stocks. A lot of stocks can trade as little as 1/10 of a penny. And some people believe that fund managers are staying away from stocks because of that issue. I would say that's probably bogus. They want to change the actual way that shares are traded. In the old days, you had to wait for a tick up or a tick down. That was 1/8 of a dollar. Even if it was a penny stock, it was 1/8 of a dollar. Of course, decimalization, being able to trade on per penny, changed things quite a lot. And of course, brought the rise of the machines, the high-frequency traders. They are thinking that maybe they can attract, if you're talking about stocks that are penny stocks, which I'm basically saying all stocks below $10 now are probably penny stocks. They're actually saying, for the most part, any stock below $750 million in cap would go back to the 1/8 of a dollar or a nickel. They're not quite sure out there which one it is. But it would be interesting to see a lot of these inexpensive stocks go to that. I'm not exactly sure that that is the reason why people are staying away from low-dollar stocks and even market caps of $750 or even as low as $500 million. I believe it is what I have stated for the reason before, and that is that since Dodd-Frank, part of Dodd-Frank was putting in a system that measured, at least tried to measure, probably not adequately, but tried to measure risk at any one time. The idea was that any CEO at any of these broker-dealers should not be able to go home at night without hitting one button and seeing what their risk factor looked like. Well, what we do know is that, and easy to test with a spreadsheet, is the volatility of stocks below $10 is vastly higher than stocks above $10. So if your stocks are very volatile, your risk factors will go up in your value at risk model and mean that you have to probably take off some cash, lower your risk, take off some trades, let me put it that way, raise cash. The whole idea behind that is this value at risk model, which really weighs low-price stocks much higher. And so for the most part, if you could go from, 15 times leverage to 25 times leverage because you bought big stocks instead of small stocks, most of the fund managers are well believing that that would be the better path. But I don't know. I don't know if this thing's going to get any traction out there. I suspect one of the reasons why is the low volume in those under $10 stocks. Of stocks that are under $10 per share price, 70% are owned by individual investors. When we go over $10, that drops to about 10% or a little less, 8%. So you can see the huge disparity once a stock gets to $10, which comes back into my whole thesis of the value at risk model. I've heard a few other people talk about it, which got me started. They haven't really fleshed it out very far, but everything I've read, everything I've tracked pretty much says that what you want to do is keep stocks that have high volatility out of your portfolio if you're a fund manager, and maybe you can get another 10 times leverage for buying stocks. Now, what has happened, and I believe the Fed knows, is that to keep the stock market up, pumping a bunch of cash into it is one easy way to do it. The problem is that they weren't really consulted a great deal when the whole Dodd-Frank thing came in. Dodd-Frank, which is he's goofy as a Christmas goose, basically threw everything in the kitchen sink, thinking that that would help everybody. Probably, about 50% of it's toxic, 50% of it's good. Probably need to go back through the Dodd-Frank bill and find out what works and what doesn't. But of course, that's government, so that's never done. Everything is gospel. Nothing can be changed. It's the law, don't you know? Anyway, when we get back to this whole issue of penny stocks, the whole thing of going back to an eighth of a dollar and maybe even going to a nickel has been discussed today, and we'll have to see how this works out. But you can give me a call at 877-927-6648. That's 877-927-6648. Love to hear your ideas. It's kind of a quiet day for the most part. We're up 3 points, 3.5 points on the S&P cash with, again, a very, very light volume. Of course, this is expiration. It looks like a lot of people are pushing the market up here, and we're probably going to hit 1,800 probably, I imagine, on the open on Monday. Probably not going to push it here too much. I suspect that could be the high that we see for the year. A lot of people are getting very antsy about retail sales, and I think we're going to be close enough to Thanksgiving that everybody's going to see that and probably see at least a little pullback into the end of the year, some tax selling, although some of that's been done already. Of stocks that are truly moving, let's see what we have here today. Pretty quiet day, actually. Agilent, probably the big mover out here today. You've got to have your A, G's, T's, and C's. And if you don't know what that means, then you don't know DNA or RNA. There's a stock name RNA, too. Ribonucleic acid. Agilent, of course, big into a lot of biotechnology. Earnings were fairly good, a decent volume, but one of the things I dislike is that this thing gapped up on good news last time, and the September 19th high had 18 million shares. This thing is well above it. But I don't think we're going to get anywhere close to that 19 million shares today. What you would really watch for is if this thing is able to close back into the 53.47 high out here. A close below that would probably tell you that you're going to have some issues out here. What else do we have? LinkedIn. A little upgrade in LinkedIn, but I don't think LNKD. Don't think it has anything more to do with anything other than hitting $230 for expiration today. Let's see if we got a quote on this right at the moment. Where's my little thing? There it is. LNKD. Yeah, 231.69. It looked to me from looking at the options earlier this morning that they wanted to pin this thing at 230. We'll see just how close they get to it. Another stock that they like to pin on expiration is Apple, and they started pushing that one. This thing they were pushing pretty hard to hit at 530. Let's see how it's doing. 525. It's going to be a little light here. Maybe I haven't looked at the options today, but looked like they were going to try to keep it up around 530. Looks like 525 is the number they're going to pin it at today. Off a couple bucks, but no big deal. Of course, we're starting to see filings aplenty. Tom went through some in gold. One of the interesting ones that we did see last night was the Godfather, Carl Icahn, upping his stake in Apple a little bit. Doesn't seem to be doing much for it today. Let's see what else is in play out here. Yoku, Y-O-U-K. This thing's been, if I can actually type, Y-O-U-K. No? Y-O-K-U. Dyslexia, a cure for found. If you get that. This thing popped up here. This thing's been a nice little mover for a few months back up in here. Profile. Hang on just a second. Okay. Operates as an internet television company of the People's Republic of China, so it is kind of the Netflix of China. Its internet television platform enables consumers to search, view, and share video content across various devices. And what can you say? Nice little pop out of here on earnings, making a nice little doji here. Certainly want to watch for an abandoned baby on this one if you get a much lower open on Monday. And again, we are getting very, very close to the end of your opportunity. The window is closing for Tiger Dollars. Our semi-annual sale allows you to get easy 25% off the goods and services, including my daily newsletter, The Path of Least Resistance, the weekly newsletter, The Tech Insider, and, of course, The Art of Timing the Trade Charts, which you can always get, and get a scan of all those Gartley patterns. Of course, huge volume today in Yoku, but give me a call, 877-927-6648, 877-927-6648.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we said before, I don't know what it's going to be. I don't know if it's going to be flipping on a light in your bedroom or turning on some cold water in the sink as you shave. It'd probably be warm water, wouldn't it? So maybe you turn some warm water on. And you're going to think, this weekend, I have failed to buy my Tiger dollars. I am going to right now go to my computer and buy my Tiger dollars. You're getting very sleepy. Very sleepy. Anyway, I kid because I care. You're going to forget about it, and then you're going to cry. And there's no crying at TFNN. No crying at all. Again, you can give me a call at 877-927-6648. I love your phone call today. It's going to be kind of a quiet day for the last couple of hours as we look at the markets and see just exactly what is coming in. Hang on a second. Why does this thing... something is weird here. Oh, there it is. Got to keep all my windows in line here. Pretty tough, though, sometimes. When we looked at saw the European markets, they were up fairly strongly this morning. Came back before the close. UK FTSE was up 0.4. Germany's DAX was up 0.2. The CAC was up 0.2. Spain was off 0.1. And Italy was off 0.4. So pretty much mixed, but The big one is Germany over there, and pretty much the same out here, although it was much stronger in the morning before the Empire numbers came out and some of the other numbers in the market. But let's see what we have here. See if we got... I need to update this. That's why. Always got to do house cleaning on the air. Anyway, yeah, we're up 4 points. And again, we had 20 minutes into this thing and haven't gotten 100 million more shares. 2.07 billion shares. So still fairly light. See if anybody in the den has anything. We were talking a little bit about gold, and I didn't think there was much to it out here. Certainly not much follow-through. If you like the IBD method of getting 3 or 4 follow-through days, certainly this is not one of them in the GLD. It has been not uncommon to see gold sell off into the weekend, so some people may give it that, but we're going to have probably a couple of very important days in the gold market. Let's see what we have for a current quote now, and that is 1287.20, so we're up 90 cents. But that 1272 certainly, had a nice little bounce off the bottom with the Janet Yellen discussion, but since then, follow through just not that exciting. So far, we're kind of being pushed up. I suspect part of that has been the expiration week. Of course, Monday and Tuesday we'll be getting set and options set up through the end of the year, and probably get a very good indication of what the street thinks on Monday and Tuesday, where we'll end up by the end of December. So it will be interesting to see whether or not we have anything. Probably the most active stocks in the last 2 months are almost always retail stocks. It'll have a lot to do with Black Friday numbers. Normally you get those after the market closes at noon. More and more analysts are standing in lines and radioing in via their cell phones and their smarty phones what's going on in these stores. Of course, Walmart, Target, all starting to open at 6 p.m. on Thanksgiving Day. So we'll have probably numbers, maybe even a little earlier numbers. I think there should be a law. When people used to always say that there should be a law. Now there's a law for everything, except for what we really need, which is we'll just wait until 8 a.m. Friday morning to get shopping started. At least you could leave people alone on Thanksgiving and they could go eat with their... I think we used to have laws when I was growing up. They were called blue laws. Nothing was open on Sunday. Why can't we have a law that just says nothing is open unless it's food, water, or gas on Thanksgiving? And that would be it. If you need to buy a tablet, well, I guess you could have the hospitals open. But other than that, probably wouldn't like to have a whole lot. Some of the traders in here saying are going flat the miners over the weekend and selling their gold, trying to hide out in cash. No, probably a pretty smart thing to do. I can't see a whole lot in here right now that says we shouldn't wait for a Monday or Tuesday.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. It's that time of year again, and our semi-annual Tiger Dollar sale is back. For a limited time only, you can get a 25% bonus on any Tiger Dollar purchase, and included in your purchase, you'll gain access to an exclusive 4-hour live trading event with Tom O'Brien on November 19th called Strategies for Trading ETFs, a live trading event. The only way to gain access to this exclusive 4-hour workshop with Tom O'Brien, which includes live trading, is by purchasing Tiger Dollars as part of this promotion. Tiger Dollars can be used for any TFNN products and never expire, so now is a perfect time to get your 25% bonus. Don't delay, this will be our last Tiger Dollar promotion in 2013, so act today. For all the details and to get your 25% bonus on your Tiger Dollar purchase today while gaining access to Tom O'Brien's exclusive 4-hour online workshop and live trading session specifically on ETFs, visit the front page of TFNN.com today.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And we're talking some spots in the den here, but hearing a big echo. But what can you say? HCA Holdings, one of the stocks moving today when there's not much moving. Basically getting a downgrade off it was down 2.7%, off about 2% now. This thing is probably pretty much given a topping formation out here, running directly into probably that resistance, at least if you're looking at a 9-day moving average. Probably not a bad approximation of what a ballistic curve is on a lot of these stocks. Seeing a few moving out here, but probably that is one of the more interesting ones for me. And what do we have for Tesla? Tesla continuing to have issues out here. A little bit more discussion from the CEO. There is one technology that would save this company and make it worth what it's supposed to be. And there's been some news in that sector. Wrote about it today in the Tech Insider, which is my weekly tech investment newsletter. We talked a little bit about the whole free cash flow issue yesterday, but still really tough for me to say that there's any stock that I'd want to own long term, especially with many of these stocks trading at least 50, if not 75% over what you would say is a even normal level for earnings. Also very upset to see some of the big names in Wall Street saying that sometimes now that 20, 25 times earnings is not too much to pay for a stock. Historically, you want to be somewhere between, on high growth stocks, 15, 16, and on low growth stocks, maybe 10 for a price to earnings ratio. Of course, if you have no earnings, what do you do? And we talked about that yesterday with Amazon. Amazon's probably trading at about a 50-time multiple if it actually did start making money. And talked about that a little bit too. But very risky to be invested long-term in the markets, but keep an eye on it. One of the bigger movers out here also today is WU. That is Western Union. Guess I'm not going to be sending any cash today. One of the bigger movers out here. But the CFO is leaving in a company that has just taken a huge hit. The worry is always when the CFO is leaving that he didn't want to participate in probably some wicked accounting. It's not always true. It's probably not even mostly true most of the time. But a lot of people are always worried, and that's what we had today. Scott Sherman will be leaving the company, and especially in a company like this that's been around for a long time. It's not a tech company where you see a lot of people arguing. Everything is pretty much straightforward. Always an issue out here, but you had the high volume low, and it's going to go right after it. That's at what do we have here? $15.51 low, and a huge amounts of shares. So we're half into that today, but I expect probably the first couple of days next week we're going to be right back down to that 15.51. If anybody has any stocks to look at in the den, they can certainly post them. You can give me a call at 877-927-6648, and I'd most appreciated. It's going to be a quiet day, as we said. Let's see what else is out here moving. I don't like that. Let's see if we can go to one of my other. Let's take a look at the NASDAQ stocks. See if I can see much out in that area. See if we've got. Should supposed to be able to. There we go. Well, that's kind of an interesting move. I hadn't had time to look at all the stocks yet today. Seagate. Look at that thing. That is very interesting. STX is the symbol for Seagate. Let's do a little bit. There we go. Let's do a little bit more out here. This thing's been banging away at these highs. And the first high, 5.3 million shares on October 21st. All these right in the $50 mid-range. October 31st, you had 8.3 million shares. Again, a lot of these stocks getting up to these highs. Huge volume and selling off and selling into it. My thesis still is that we are seeing stocks enter distribution mode. Yesterday, we tried to get up into that high and challenge it with 50% volume from the last time, with 4 million shares today, 2.8 million shares, and slightly moving back. I didn't see any news on this, but maybe there is some. Let me check real quick. I don't see anything out here. Seagate, insider sales. Ooh. I didn't see this. It actually happened last week, but I guess it's just getting reported today. 200 insiders sold 326,000 shares. So let's see if we can see just who is selling in here. Not right now. Let's see. Okay. Chairman and CEO Seagate sold 326,000 shares for a total of $16 million. Been waiting for this and probably the memory sector out here to really give us some signs. Of course, this is a huge move for a industry that had been for 10 years in a commodity business, and of course the floods in Malaysia finally getting him out of that, and of course some new products, so that's not at all. The other sector out here that is showing a commodity business but still running as hard as ever is Micron. This thing up to $19.83. Not a lot of volume. They're getting pretty thin out here. And of course, as we've broken above the last high that happened on October 7th, you needed 600,000 shares, or 61 million shares, excuse me. And we got about 31 million yesterday, about 40 million today so far. So maybe 50 million by the end of the day. But still short the last highs out here. You can even look at the October 10th high that had 78 million shares. So big mover out here for shares. In Micron, of course, this thing was down $5 not that long ago. Certainly looks like when this thing fails, probably going to head right back down to that $14 level, but have a few days in that. Have a few other stocks moving big time on expiration day. One we've been talking about for a while was X1. This thing came out, was down like $3 or $4 after hours. Good conference call. Everybody talked about it. The problem continues to be that these are very young growth companies, and most likely will have to come back to the well for cash. This thing got down to $42.01. Especially if you're in this sector, I would be waiting for a pullback down to those lows. So I think you've got plenty of time in a business that's already frothy as all get out. We've got a Qihu, Qihu request in the den. And let's see what else we have out here. This thing's kind of toppy too. What do we got here? You just need 4 million shares, and of course you had 4 million shares 2 days ago. Kind of light volume out here today. Looks like this thing's one more time wants to get somewhere around that $95 to $97 range. And maybe we'll see that Monday and Tuesday. Of course, today is expiration day. You're going to have options roll over Monday and Tuesday. Normally, you get a fair degree of volatility, and that is by purpose. You got a lot of positions to get in and out of if you're a fund manager, and everybody likes to participate so that they can cause a little action. Kind of like the auction day. Everybody gets on the da-da-da-da-da and sold to the slub in the first row. But certainly we're going to see probably a fair degree of volatility Monday and Tuesday, and then we're probably going to see which way this market is truly going to go into Thanksgiving weekend. But certainly, I tell you what, it's tough to say that you're going to get anything other than a test of the top. And if that came on very light volume like we've had the last 2 days, that would be at any close below a 3x3 or 9-day simple moving average would probably also say that you had a top in. This thing would probably come back down to around $75 where it's been finding support before. So I wouldn't say there's a lot of upside. One of the things you do want to talk about when you look at a stock that's $9 or $90 is that there's a high propensity, I think 80 or 85% of those stocks will hit $100. Normally what you want to do is buy these things when they hit $90. And hold on to them. Normally they'll go right to that 100. Kind of interesting that this one has not, and it may be more of an issue that this is actually a Chinese company and the exchange rate, things like that. But I've never looked into that. Might be a very interesting study to find out here. So what else do we have going on? Let's see. Okay, Seagate, win. It's off 1.44. Oop. Wrong stock. We need one more in. Can I buy an N? There we are. Wynn Resorts Limited. This is interesting. This one also has created a double repo pattern. I've brought this up several times. And this is not the absolute perfect, but lower open on Monday certainly would be. This is about as good as you get. Coming back up to test the highs yesterday on 1 million shares where you needed about 1.7, maybe even a little bit more volume. This thing has pulled back down to the support line. And you can use either the 9-day simple moving average, or we can go up here and change that to the displaced moving average. Both of them are going to come in fairly close. The 3x3 displaced moving average will trigger normally just a little quicker. What you're normally looking for is somewhere between 10 and 15 days above the moving average, a close below it for 3 or 4 days, close back up above it, and then a close back below it. You'd probably want to very closely watch any close below it Monday or Tuesday. That would probably set up some kind of high and a move back down to the 145, 144, 140 level, 145 is probably the next level of support in this stock. So that consolidation zone. Yeah, you got 144.99 back on May 22nd, 2013, and that's where this thing took off. Where this thing probably wants to come back to. Of course, they own a lot of Chinese casinos also. So keep an eye on that. Let's see what's moving on and up on the high side. Vertox Pharmaceuticals up $3. Green Mountain Coffee Roaster, Baidu. Let's take a look at Baidu. I haven't looked at that in a couple of days. BIDU. These China stocks have been moving up strongly. I noticed that some of the policies in China over the last couple of days are being eased to try to get some growth back in the country. Really not seeing a lot of volume here, though, in Baidu the last 3 days as this thing started moving up. Looks like just one more test in this high. Let's see if there's anything in this. Yeah. I mean, you've got to get above this 14 million share high day that got sold off on October 13th. Getting into the bottom of the wick of that candle today, I imagine we will probably see some kind of a test to get into that on Monday, and that's going to tell you a lot. But boy, I tell you what, if you looked at the last 5 days out here, I'd probably be taking my money. Doesn't look like a whole lot in that. Garmin's, NZP, MU, Nuon. Let's take a look at Nuon. I haven't looked at that for a while. This is another one of the Godfather's stocks. He's been pushing this. It has been one of his losers. Nuance Communication. He got into this thing around $19. So old Carl Icahn doesn't make money on everything that he trades, but he's been buying this thing. Looks like it's found at least a temporary bottom around $15.50. Up a nice little tick today, but not a lot of volume. These, of course, are the people behind the Siri voice system, and we'll talk a little bit about these guys when we come back. Give me a call, 877-927-6648. I would appreciate your call.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're going to go right to John in Philly. How are you doing today, John?
Hey, David. Thanks for taking the call. David, I wanted to ask if you could look at GG, and going back on the daily chart all the way back to June. Now, the GG made its low for the year at 22 and change or something into June, and you had a one-day rally. You had a rally, I think it was June 28th, where there was a wide price spread, lots of volume, sign of strength, as Tom would call it. GG has fallen back here on October 15th, and then again kind of this week and last Friday into that same bar. I'm just wondering, as you look at it, in your way of looking at things, if you see any clues to indicate whether or not this stock will bottom here against that sign of strength June 28th, or if it's likely to bust lower.
I would suspect you're going to get the October 15th low tested that has not been tested so far. That gap is still a little bit open out here. And I think you're probably going to get it pushed down there to 23, 22. And if you got any kind of volume, then you're going to find that 22, 22. But as far as I can tell, I would have liked to seen this volume back off 32.15, really pull back on lighter volume. The energy is a little lighter, but certainly not light enough to make me think that this thing is bottomed out yet. On my power law vector indicator number, I've got 8.5 on the move up from that 2222 low and 8.1 on the thing down. I'm looking for probably 6 or 5 on that last leg down. They're almost the same price, length, and everything. So as far as the energy coming in and out of the stock, it's about the same. Normally,
I'm looking on Tiger TV. Can you at least conceptually describe how the 8.5 power law vector indicator value is derived? I'm not looking for the formula or anything, but just conceptually what that number means.
Well, the formula is very close to exactly the same way you get charged for your electricity. It's how much you're using, it like 120 or 220. It is at a light bulb or a hair dryer or your air conditioner. And that is the volume, right? There's a price change, which is the amplitude, so whether you're using 120 or 240 volts. So basically it goes back in just like an electrical calculation, and of course how long you've got it on. Air conditioning on for a couple minutes, no big deal. But how long is a factor in this too. So basically you've got the same kind of thing as you would have in any kind of basic electrical formula. That is how many watts it's pulling, how long it's pulling them, and just what the voltage is on it. So you've got, basically I've created the same thing that you would get in an electrical circuit, which is how do you measure it? How do you quantify it? So volume up, volume down, and there's a few tricks to get this thing to work. It mostly has to do with how you work out the beginning and ending days. But that's pretty much it. If you went back and
that description helps me with the concept. So thanks on that.
It's just how much energy got burned on the way up and down, as if it was electricity and you were paying for it on the side of your house with that little spinning wheel.
Sure, got it. Excellent.
So, the thing is that you can have a little bit of electricity used for an incredibly long time, and there's some correction factors in that. But this is where the darn thing's almost symmetrical.
Yes.
You should have seen on this last leg down a whole lot lighter. I would have liked to seen, like I said, maybe a 5 or 6 in there to really tell me these things were getting ready to take off. I didn't see any of that in any of the gold stocks, which makes me think we got lower. Thanks for the call. See you next Monday, same bat channel, same bat time, 4 o'clock hour, Tom O'Brien Show.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.